know when Warren Buffett started investing? His investment journey began at an early age. One of his earliest notable investments was made when he was just 11 years old. In 1942, he purchased 3 shares of Citi Service Preferred at $38 per share. Shortly after his purchase, the stock dropped to $27 per share. Rather than panicking and selling, young Buffett held onto his shares until they rebounded to $40 per share. He then sold them, making a small profit. So, if you are in your 20s or early 30s, this video will be really beneficial to you. Title: In our modern world, where possibilities seem to stretch endlessly, investing $10,000 can feel like standing at a crossroads with countless paths leading in different directions. The challenge lies in deciphering the maze of investment options and choosing the one that promises the most fruitful journey for your hard-earned dollars. While many still view gold as the ultimate symbol of wealth, the recent world presents a plethora of alternatives that might outshine the glimmer of the precious metal. Gold, once considered the bedrock of financial security, no longer stands as the undisputed champion. Its value can be as fickle as a summer breeze, blowing hot and cold without much warning. In a world that evolves faster than ever, investing solely in gold may leave you clinging to outdated notions of financial stability. To truly understand the landscape of financial growth, we must first grasp the concept of inflation. Inflation is like a silent thief that stealthily robs the purchasing power of our money. The cost of living rises, and suddenly, that $10,000 doesn't stretch as far as it used to. Gold, often hailed as an inflation hedge, might not be the shining knight we imagine. Its value doesn't always keep pace with the rising tide of inflation, leaving investors stranded on an island of diminishing returns. Now, let's explore specific ideas on how a beginner can invest a $10,000 portfolio. Investing $10,000 is a significant opportunity to grow your money, and making informed choices is key to success. Let's explore some straightforward and detailed investment ideas to help you make the most of your funds. 1. Savings account or certificate of deposit, CD. A savings account or CD is like a safe haven for your money. While the returns are modest, your principal amount is secure, making it a low-risk option. Savings accounts offer easy access to your funds, while CDs require you to lock in your money for a fixed period, often resulting in slightly higher interest rates. 2. Stock market. Investing in stocks means buying shares of companies. It's like owning a tiny piece of a business. The stock market can be a roller coaster, but historically, it has provided strong returns over the long term. Investing in stocks allows you to become a part owner in companies that contribute to the fabric of our ever-changing world. Investing in stocks can provide individuals with an opportunity to grow their wealth, achieve financial goals, and participate in the success of various businesses. This essay aims to elucidate the myriad benefits of the stock market for beginners and provide specific ideas on how to invest a $10,000. One of the primary advantages of the stock market is its potential to create wealth over the long term. Historically, the average annual return of the stock market has outpaced inflation, allowing investors to grow their money at a rate that can outperform other traditional investment avenues. When an individual invests in stocks, they become partial owners of the companies they invest in. This ownership grants them the right to share in the company's profits through dividends and capital appreciation. This direct involvement in the success of businesses is a unique aspect of stock market investing. The stock market is highly liquid, meaning that investors can buy or sell shares relatively easily. This liquidity ensures that investors can access their funds quickly when needed, providing flexibility and ease of managing their investments. Diversifying a portfolio by investing in different stocks across various industries helps spread risk. If one sector faces a downturn, it may be offset by gains in another, reducing the overall risk of the portfolio. Diversification is a key strategy for long-term success in the stock market. Investors in the stock market can benefit from the expertise of professional fund managers. Mutual funds and exchange-traded funds, ETFs, allow individuals to invest in a diversified portfolio managed by experienced professionals, providing a hands-off approach for those with limited time or knowledge. Conduct thorough research to find an ETF that aligns with your goals. Look into factors such as the fund's objective, historical performance, expense ratio, and the index it tracks. Popular ETFs include those that track major indices like the S&P 500 or specific sectors like technology or healthcare. Diversification is a key principle of successful investing. Choose ETFs that provide exposure to different sectors, industries, or geographic regions. This helps spread risk and minimizes the impact of poor performance in any single asset or market segment. ETFs charge fees known as expense ratios, which cover the fund's operating costs. Compare expense ratios across different ETFs and opt for those with lower fees, as high fees can eat into your overall returns over time. Liquidity is an important consideration when investing in ETFs. More liquid ETFs generally have narrower bid-ask spreads, reducing transaction costs for investors. Check the invest a fixed amount regularly, regardless of market conditions. This approach can help smooth out the impact of market volatility over time. Some ETFs pay dividends from the underlying assets. Consider reinvesting these dividends to take advantage of compound growth, especially if your investment horizon is long-term. Regularly review your portfolio to ensure it aligns with your investment goals. Market movements can cause shifts in asset allocations. Rebalance your portfolio periodically to maintain your desired level of diversification. The financial markets are dynamic, and staying informed is crucial. Keep abreast of economic and market trends and continuously educate yourself about different investment strategies and opportunities. Remember, the key to successful investing lies in continuous learning, staying informed about market trends, and periodically reassessing your portfolio. Whether you choose individual stocks or opt for the convenience of ETFs, the principles of diligence, patience, and a long-term perspective remain paramount. If uncertainty arises or guidance is needed, consulting with a financial advisor can provide valuable insights tailored to your unique financial circumstances. Thank you for watching till the end.